Can we assume that a rate cut out of the ECB, given the totality of the inflation data, is nailed on?
I don't think so. I don't think nailed on yet, Guy. I think that although we're seeing the headline numbers coming down, the core is that little bit more sticky, and that's creating a little bit of a sort of disconnect on the governing council between those that would like to see more evidence that inflation is firmly under control and the doves that they're saying, as you just said, that it's a bit of a no-brainer, no questions to be asked. This is an obvious choice for us to make. And I think that's why you're seeing that support coming into the euro. Now, if you look at the long-term prognosis, yes, inflation is definitely on its downward path. If you look at five-year inflation swaps, they've definitely come down some way, just a little bit above that 2% level now on the longer term basis. But at the same time, we don't want to cut too hard and then be forced into retracement to go the other way again. That's what the Fed's very worried about as well. And so that's why there's some caution in the governing council. And that idea that maybe even if there is another cut coming, that the ECB may be going a little bit more hesitantly and slowly than the Fed looks like it's going to be doing once it starts in September.
Paul, from an FX point of view, what matters more? Some of the European inflation numbers that were, of course, hitting the wire, as Guy just mentioned, the PCE or the PCE data later today?
I think that overall, everybody is still watching all of those numbers coming out of the US, Kriti. And PCE is going to be pretty important. But next week's payrolls, of course, is going to be absolutely critical for this, for determining how hard the Fed comes out of the blocks. Is it going to go 50 or 25 in September? It looked like 25 was pretty obvious. But a little bit more of that pricing has come back in on the 50. We've seen, some more strength in the data this week, but it's a little bit kind of up and down at the moment. I think that, overall for FX, everybody's going to be fascinated still on that Fed path and on what the outlook for US inflation looks like as well. For the euro specifically, it feels like, it's moving in line with a lot of the rest of the currency markets at the moment. It's following the sort of trajectory against the dollar, and the dollar really is holding the key to everything. And the dollar has been on a strongly downward path for quite a while now, and you've seen currencies around the world coming up against it as a result.
Well, Paul, if the dollar is holding the key, the Chinese government also holding another key this morning, saying that they might allow refinancing on $5.4 trillion worth of mortgages. Paul, can you take us through how significant that is? It is certainly creating a bid over in the Chinese equities. Is this the stimulus everyone's been waiting for, or not quite?
It is a sign that the policymakers are paying more attention to the needs of the market, which is that they need to free up some consumer spending power. The changes in the mortgages wouldn't count for new first-time home buyers. They're already benefiting from it. It's people that are on existing mortgages who would have the opportunity to finance at the start of next year, but can now bring that forwards. And particularly if you have the banks competing against each other for that business, that should drive down rates, make their monthly spending less, and give them more cash to put it back into the economy. And that's what is giving everybody that boost, is that kind of feel-good factor and the hope that more measures will follow through afterward.